7-Eleven Malaysia Holdings Berhad SEM is a non-operating investment holding company which has been listed on the main market of Bursa Malaysia since 2014. There are two major subsidiaries which include 7-Eleven Malaysia Sendirian Berhad and Caring Pharmacy Group Berhad. Through its major subsidiary 7-Eleven Malaysia Sendirian Berhad, SEM is the owner and operator of 7-Eleven stores in Malaysia. Incorporated on 4th of June 1984, 7-Eleven Malaysia has made its mark in the retailing scene and remained a prominent icon for over 37 years. 7-Eleven Malaysia is the pioneer and largest 24-hour standalone convenience store operator in Malaysia. Upon achieving its 1,000 marks in stores network, 7-Eleven Malaysia opened its door to local entrepreneurs through its unique franchising program in 2009. 7-Eleven is the first franchisor in the local market to offer existing profit-making stores to franchisees. Through another major subsidiary, Caring Pharmacy Group Berhad, SEM is the owner of one of the largest retail pharmacy chains in Malaysia. Established since 1994, Caring has grown its outlet to 144 by end of 2020, with an established presence in the Klang Valley, Melaka and Johor. Caring was listed on Bursa Malaysia from 2013 until May of 2020. The acquisition of Caring by SEM was completed in June 2020, marking SEM's diversification and foray into the retail pharmacy segment. 7-Eleven's vision is to be the best retailer of convenience, and their mission is to consistently serve the changing needs of customers for their convenience. Here are the factors to consider having a segment reporting. Firstly, nature of the product or services. 7-Eleven's nature is on both selling various products and provide services. The company's major business segments include food, beverages, other payment services, pharmaceutical products, personal care products, and healthcare products. Secondly, nature of the production processes. 7-Eleven is active in reducing packaging and eliminating hazardous packaging. They also promoted the sale of eco bags at stores. It was included in their goal in ensuring sustainable consumption and production patterns. Thirdly, type or class of customers. The types of customer for the products or services offered differs based on their age. It can be categorized into adults and youth. For example, more adults will buy groceries and medicine, while youth are expected to buy instant foods and use services like sale of mobile phones reload cards and online purchases payment service. Lastly, methods of distribution. The company practices 7E cross-dock system. Suppliers deliver their products to their centralized distribution center for consolidation before being funneled to the regional cross-dock hubs, where these products are then broken bulk for delivery to stores. On a daily basis, more than 1 million customers walk into their stores. Next is types of segment. Operating segments consist of business segment and geographical segment. Business segment is a distinguishable unit of an entity that is engaged in providing a product or service. As for 7-Eleven Malaysia Holdings Berhad, the business segments comprise of food segment, beverages segment, other payment services segment, pharmaceutical product segment, personal care product segment, and healthcare product segment. Next is geographical segment. Geographical segment is a distinguishable unit of an entity engaged in providing products or services within a particular economic environment. 7-Eleven Malaysia Holdings Berhad has segregated their geographical segment based on city, country, and region in Malaysia. Each city in Malaysia are known to have at least one of 7-Eleven convenience store. Other operations of the group mainly consist of investment holding and real property investments, none of which constitute a separate reportable segment. The Chief of Decision Making (CODM) is a person whose function is to assess the performance of the various segments and to decide on allocation of resources to the segments. That person may be the Chief Executive Officer, the CEO, Chief Operating Officer, the COO, or Chief Financial Officer, the CFO. Referring to 7-Eleven Malaysia Holdings Berhad Annual Report, Mr. Tan Yu Ming and Mr. Wong Wai Kiong, the Co-Chief Executive Officers, are the CODM of the company. This is seen clearly as the co-CEO holds the primary executive responsibility for the group's business performance and business activity. They are also responsible in managing the group in accordance with the strategies and policies approved by the board. Lastly, they identify the existence of managers and leading executive directors in making and implementing the day-to-day decisions on the business operations.
Okay, we shall proceed with the process how we should identify the reportable segment and non-reportable segment. According to the FAR 8 operating segments requirement, an entity shall disclose information about a segment separately only if it passes the quantitative threshold test of 10% and 75% test rule to identify the qualification of reportable operating segments. The 10% threshold task consists of 3 types. First, revenue basis. Second, profit or loss basis. And lastly, the third one, total asset basis, which is it must satisfy 10% or more. 7-Eleven Malaysia Holdings Berhad is using revenue basis and measuring its operating segment. Therefore, the 10% threshold test will be evaluated based on its total reported revenue from sales to external customers and inter-segment. After determining the reportable segment, the entity must do the 75% test rule, in which the total external revenue of the reportable segment must be at least 75% of the total external revenue of the entity. We continue with original revenue statement. As you can see, there are 3 segments that are convenience stores, pharmaceutical, and others. The MFRS 8, we should identify the segment which is reportable or non-reportable by the 10% threshold test. So, convenience stores and pharmaceutical get more than 10% threshold test, which is 64.43% for convenience stores, and pharmaceutical get 35.54%. So we can conclude that convenience stores and pharmaceutical are reportable segment, but for others it is non-reportable segment because it get less than 10%, which is 0.03%. After we identify the segment, we should go to the next step, and it is use the 75% test rule. 75% test rule, we should calculate the total external revenue of reportable segments, divided it with the total external of all segments, and multiple it with 100. So external revenue that are reportable segment are the convenience store and pharmaceutical. So we should sum up the amount of 1,810,454 ringgit plus the 998,456 divided with 2,809,087 ringgit and multiple it with 100, we get 99.99%. This is the reported segment revenue extract on 2021 as per 7-Eleven Malaysia Holdings Berhad's annual report. We reproduce this segment revenue because we want to fulfill the requirement to get the 4 reportable segment and at least one non-reportable segment. You can see that we have 7 segments, which are food, beverages, other payment services, pharmaceutical, personal care, healthcare, and others. We should use a 10% threshold test to identify the segment. So, food, beverages, other payment services, pharmaceutical, personal care, and healthcare get more than 10% for the threshold test. So, we can conclude that the 6 segment get reportable segment, but for others, it's only get 0.03%, and it means that it's less than 10%. So we can conclude that it is a non-reportable segment. Okay, for 75% test rule, we should sum up the amount for the reportable segment that consists of food, beverages, other payment services, pharmaceutical, personal care, and healthcare, and divided it with the total amount of the external revenue, which is 2,809,087 ringgit, and multiply it with 100. So we should get 99.99%, that is more than 75%. As comparison, the new segmental report, by using the adjustment of new operating segment, there will be changes in the reportable status. As per the calculation by using revenue basis, there will be 6 reportable segments. As the stated percentage is exceeding 10% of combined revenue of all operating segments in 7-Eleven, that comprises food, beverages, other payment services, pharmaceutical, personal care, and healthcare. For others, they will be reported as others as it fails to meet the 10% threshold test for the test requirement according to the revenue basis. However, if 7-Eleven believes that the information in the non-reportable segment is significant to the users of financial statement, the entity may choose to include others as reportable segment by applying the 75% test rule, since the 75% test rule has been satisfied by the company.
In conclusion, segmental reporting has its advantages and disadvantages. These are the advantages of segmental reporting. Shareholders able to gain better understanding of the company's performance. Segment information assists financial statement users in analyzing and understanding the company's financial statement by permitting better assessment of the company's past performance and future prospects. Second, shareholders are able to gain info about company's business. Segmental reports help investors and the shareholders know about the business process that have been operated by the company and also their background as a whole. It also helps them to evaluate the company's performance. Thirdly, investors are exposed with the future plans of the company. The investors also be exposed to future plan of the net cash flow gained by the company and will get a better understanding about the company in order to make a clear decision about their investment. Lastly, revenue of each segment can be identified separately. In segmental reporting, the revenue of the company has been separated from each other segments. It can distinguish segments that gives more profit and which are not profitable. The evaluation can prompt a change in strategic direction for the managers to make the future decision. However, there are certain disadvantages that need to be highlighted. These are the disadvantages of segmental report. It includes misunderstanding likely to be found among investors about segment information. Investment by investors and creditors is made in the company but not in its individual segment. Therefore, investors require information for the company as a whole to make proper decision. Second, it emphasizes on the present. Segment reporting can place too much of a focus on short-term numbers. If 7-Eleven Malaysia Holdings Berhad creates a segment that runs a significant deficit before the right people and infrastructure are in place, the losses incurred will be outweighed by the firm's overall performance, which will give a negative impression on the financial statement. Lastly, data manipulation. The segmental report's information can be manipulated as it may be reported through the view that the management wants the user to see. The users will get false idea of the company's performance.
FAR570 Malaysia is using a discrete method as the basis for the preparation for the interim report. The company is preparing the interim report in a separate period and on a period basis. The company prepared its interim report quarterly in the year of 2021. The discrete method does not allow subsequent restatements for the interim periods, and each period must stand on its own. Assets, liabilities, income and expenses must all meet the definitions as articulated in IFRS at the end for the interim period. Only information at that date is used to make the decision. A cost that does not meet the definition of an asset is not treated as one in the interim period.
Two accounting policies used in preparing the interim report can be seen in property, plant and equipment and inventories. For the property, plant and equipment, the company used cost model and the depreciation is being measured by straight line basis over the useful life. For inventory, it be measured on cost on net realizable value NRV, whichever is lower.
There are content that should be in the interim report. First, the interim financial report is unaudited and has been prepared in accordance with MFRS 134 interim financial reporting. Next, presented in Ringgit Malaysia. Third, the report should be prepared on a consolidated basis if the most of annual financial statement was a consolidated statement. Lastly, the basic and diluted earnings per share on the face of the statement if the entity presents the item of profit or loss in a separate statement. There are financial statements that prepared by 7-Eleven Malaysia in its interim report, which are unaudited condensed consolidated statements of comprehensive income, financial position, statements of changes in equity, and statements of cash flow.
The period for current and comparative of each statement prepared by the company. 7-Eleven Malaysia Berhad will end the accounting period on 31st December each year. The current and comparative statement prepared will be measured from 1st July to 30 September 2021, which is in third quarter of the accounting period of the year 2021. For statement of profit or loss and comprehensive income, the current interim report is 3 months, which is from 1st July to 30 September 2021. The cumulative report is 9 months from 1st January to 30 September 2021. The comparative of current interim is 3 months from 1st July to 30 September 2020, and comparative cumulative is 9 months from 1st January to 30 September 2020. For statement of financial position, the current interim report is 9 months, which is from 1st January to 30 September 2021, and the comparative report is 12 months, which is 1st January to 31st December 2020.
Next will be the statement of changes in equity. The reporting period for current interim reports is 9 months, starting from 1st January 2021 until 30 September 2021. For reporting period for comparative is 9 months, starting from 1st January 2020 until 30 September 2020. Next, statement of cash flow. The reporting period for current interim reports is 9 months, starting from 1st January 2021 until 30 September 2021. For comparative, there is 9 months for reporting period, starts from 1st January 2020 until 30 September 2020.
We will make 2 adjustments in third quarter of interim reports by using the statement of financial position as at 30 September 2021.
We go first to the first adjustment, which is depreciation. On 1st July 2021, 7E had a building that cost 15 million and its accumulated depreciation was 4 million. The company depreciates all its buildings with a straight line basis method for depreciation with 20% per year and not depreciation on the disposal year. On 1st September 2021, 7E has disposed one of its building that cost 8 million ringgit. the disposal made a profit of 800 ringgit. The carrying amount of the disposal building is 6.5 million. On the same date, 7E has purchased a new building that costs 10 million ringgit. This will be the journal entry. At 30 September 2021, debit depreciation expense account amounted to 750,000 ringgit and credit accumulated depreciation with the same amount. At 1 September 2021, there is disposal of one of the building. The journal entries will be debit bank with 7.3 million and debit accumulated depreciation for 1.5 million ringgit. And then will be credit a building account since its disposed the building amounted to Rm 8 million. And also credit the profit on disposal for the building 800 ringgit. At 1 September 2021, 7E Malaysia bought a new building and the journal entries will be debit building account 10 million and credit bank account with the same amount. The depreciation for the new building will be 167,000. The calculation for the carrying amount for the building starts from 1st July 2021 with cost of building 15 million ringgit. The accumulated depreciation at the end of 30 September will be 4.75 million. Since 7E has disposed one of its building, the cost of the building will be deducted with Rm 8 million. The accumulated depreciation for the disposal building is Rm 1.5 million, also will be deducted. At 1st September 2021, 7E has bought a new building at 10 million and the depreciation for the new building is 167,000. Therefore, the total cost of the building as at 30 September 2021 is 17 million ringgit and the accumulated depreciation for the building is 3.417 million. Therefore, the carrying amount for the building as at 30 September 2021 is 13.583 million.
The second adjustment is in inventory. On 31st September 2021, the company had 5 million units of inventory with 4 ringgit each and the NRV is 2 ringgit each. The expected NRV is 2 ringgit and 50 cent each. The inventory should be recognized in NRV which is lower than its cost of 10 million ringgit. The 10 million ringgit loss in the inventory should be recognized in SOPL. On 31st September 2021, the inventories will be recognized as 20 million and the loss of 10 million in SOPL should be reversed by the company.
After the two adjustments, the condensed consolidated statements of financial position, the extracted one will be like this. There are changes in the unaudited part. The cost, plant and machinery will change to 358,268,000 and the accumulated depreciation will change to 210,330,000. Therefore, the carrying amount will also be different, which is amounted 339,235,000 after the adjustments. The current assets for inventory also will change to 360,243,000.